Hello, this video is looking at the first 4 tasks of the Management Accounting Techniques AAT Sample Assessment number 2. So 2.5 hours, but don't forget there's the spreadsheets at the end. So you want to try and make up a little bit of time on these first 4 tasks. So number 1, 24 marks. This task is about costing techniques. Identify whether the following statements about absorption costing are true or false. The value of inventory under absorption costing is lower than the value under marginal. Well, that's clearly false because with absorption costing, we include our fixed production overheads, and in marginal costing, we don't. The absorption cost of a product always includes fixed non-production overheads. Well, that's not true. It always includes fixed production overheads, but not the non-production ones. Identify which 2 of the following are included in the value of inventory under marginal costing. So under marginal costing, we include the prime cost because it's prime cost plus variable production overhead gives us our marginal. If we were to add our fixed production overhead as well, that would be absorption. A department has materials which are no longer required in production and have been returned to inventory. So identify the journal entry. So if it's been returned to inventory, my asset of inventory is increasing and I am no longer using it in production, so my production expense has reduced, hence debit inventory, credit production. Marvellous Bakery is a manufacturer of breads and cakes. Specialist ingredients are used in the manufacture of basic cupcakes, as well as flour, which is used in several other products. During November, 20,800 kilos of flour was issued to the production of basic cupcakes with a value of £51,168. Identify the correct journal to record the issue. Right, so this time materials are leaving inventory, so it must be credit inventory. It's nothing to do with the bank. We're issuing it to production, so it must be debit production, credit inventory. The specialist ingredients for basic cupcakes were ordered once during November. Marvellous Bakery uses the economic order quantity to order the specialist ingredients. So the economic order quantity works out the optimum volume, in this case kilograms, to order so that we're kind of optimizing the balance between holding stock for too long. Obviously, if you hold stock for too long, it starts rotting and getting stolen and you've got high storage costs, versus ordering every 5 minutes, where of course you've got high costs of administration, checking what's been received and lots of processing costs. So that's what the purpose of it is. There's a formula that you have to know, which is the square root of 2 times the ordering cost times the annual demand, divide by the holding cost, and then don't forget to press your equals button followed by the square root key, depending on what kind of calculator you're using, obviously. And in this case, feeding that data into the formula should give you an answer of 9,000 kilograms. Way to remember that is 2 cod and chips. So cost of ordering is your CO for cod, demand is your D, so cod, and then underneath the cost of holding sort of stands for chips, and then you've got 2 portions to remember the 2, and it's on a square plate to remember the square root, but just basically a formula to memorize. Calculate the total cost of the November order of the specialist ingredients. If we're ordering 9,000 kilos and each kilo costs £4.50, we just do 9,000 times the £4.50, which is £40,500. In addition to the flour and the specialist ingredients, the other costs incurred in the production of basic cupcakes were: we have to calculate the total prime cost. So prime cost is my direct materials plus my direct labour. So if I go up, now this is the key with these new exams, well, they're not that new now, they've been going a year, but you know what I mean, is that you have to make sure you look at the continuation of the question. So up here, we know that the flour, which is a direct material, costs 51,168. We know, because we've just worked out, that the cost of our specialist ingredients is 40,500. So let's add that on as well. And then finally, we've got our direct labour to add in, which is 103,000. So adding those three figures together gives us 194,668. Then we have to calculate the total marginal cost. So marginal cost is our prime cost plus the variable production overhead, which is 56,250. So adding that on gives me 250,918. And then the total absorption cost. So we take our marginal cost and we add our fixed production overhead of 96,326. So my total absorption cost will be 347,244. Marvellous Bakery has been working on a batch of large novelty cakes for an event in December. At the start of November, work in progress for the novelty cakes was valued at 3,264, with the following further costs incurred during the month of November. Right, so we started November, we'd already put this much cost for that, could be a combination of materials, labour and production overhead. That's what's been incurred so far, and then we've got these additional costs to come. So the total cost of production to date for the novelty cakes is going to be simply all of those numbers added together. So that gives us a total of 151,875. At the end of November, 1,900 novelty cakes were completed and 800 were partially completed. The partially completed cakes were 75% complete. Right, so if we had 800 that was 75% complete, 75% of 800 is 600, so that's equivalent to 600 completed units. So the cost per equivalent unit of the novelty cakes. So what we're going to do here, we're going to work out our total equivalent units. So that's going to be the 600 that we just discussed plus the 1,900. So I've got 2,500 novelty cakes, equivalent units. I've just worked out above the total production cost was 151,875. So I'm going to do the 151,875 divide by my 2,500 equivalent units, and that gives me a cost per cake of £60.75. Then calculate the closing value of the work in progress. Well, the work in progress was the 600 cakes. 600 multiplied by the £60.75 gives me 36,450. Okay, on to task 2, which is also 24 marks, about attributing costs. So Kitty Pie Limited is a manufacturer of kitchen equipment. Overheads are allocated and apportioned to departments using the most appropriate basis. So we've got to pick the most appropriate basis. So depreciation of motor vehicles, that will be the value of the vehicles. Office rent and rates, to do with space, so floor area. Department supervisor salaries, the fact they're department specific means that we can allocate those. And then electricity is going to be power use. The value of actual overheads incurred by Kitty Pie last month was lower than the overheads absorbed. So if we didn't absorb, no, hang on a minute, the actual was lower. So we must have absorbed too many. So we'll have over-absorbed overheads last month. And this will, right, so if we've over-absorbed overheads, it means at the moment we've got too much expense. So when we fix that, so we've got too much expense, so we're crediting our expenses, which means that we're going to see an increase in our profit. Zay Limited is a furniture manufacturer and has 2 cost centres, production and assembly, and 3 service centres, maintenance, delivery and admin. Budgeted overhead costs have already been allocated and apportioned for the next quarter. The overhead costs of the service centres need to be reapportioned to production and assembly. So we're just doing the bottom half of a allocate and apportionment question. So they've given us this data about how to reapportion the service centre costs. Right, so we've got to complete the table. So there you've got your total overheads done for you. So we've got to complete this by reapportioning costs of the basis of the information given. Now make sure you read the task instructions. So enter your answers to the nearest whole pound. Use minus signs to indicate any negative figures. Right, so administration is being dished out in these percentages, 45, 25, 15, 15. So what I'm going to do here is I'm going to put minus, not brackets, follow the instructions. And then I'm going to dish that out. So 45% gives me 303,750. 25% gives me 168,750. 15% for the other 2 service departments. So they're getting a reapportionment of the admin. So there's reciprocal service going on here. So that's the first row done. Right, now maintenance. So what's happening with maintenance? Right, so they've told me that maintenance is going in this split between the other 3 departments that are remaining. So what I'm going to do here, if I add up the 560 plus the 490 plus the 350, I get 1400. And then I'm doing my usual formula. So I'm basically doing 560 divide by 1400, which incidentally is 40%. And then I times that by the figure that I'm trying to dish out. Now be careful here, the figure you're trying to dish out for maintenance is the sum of your total overhead plus that reapportioned administration. So the sum of those 2 figures is 280,000. So it's that figure. Remember, I've just done 560 divide by 1400, which was the sum of all of these. And then I now need to times that by that 280,000. which gives me a figure of 112,000 for production. Follow the same system, so we're going to do 490 divided by 1,400 times by the 280,000. So that gives me 98,000. And then the delivery, same system again. So you do 350 divided by the 1,400 times by the 280,000, which gives me 70,000. Right, then for delivery, same system. So add your two numbers together, 6,280 plus 3,720. Oh, missed a digit on my calculator. 3,720. So that comes to 10,000. So I'm going to do 6,280 divide by 10,000 times by the total figure that I've got to dish out, which is the sum of all of those for delivery. And that gives me 194,052. Then we do the same for assembly. So you're going to do 3,720 divided by the 10,000 total, multiply by the 309,000, which gives us 114,948. Zay Limited uses activity-based costing to calculate overhead recovery rates. For the production department, this is the number of production runs. For the assembly department, it is the number of inspections. Calculate the overhead absorption rate for the production department on the basis of the number of production runs. Enter your answer to the nearest whole pound. Right, so what we're going to do here is we're going to take our budgeted production, which is 184,660, and we're going to divide that by our budgeted production runs. So it's important whenever you're doing an overhead absorption rate, you're always basing it on the budgeted figures. All right, so that gives us an answer here of 34,190. Then we do the same for the assembly. So we take our total budgeted figure from here and we divide it by our budgeted number of inspections. So that gives us a total of 96,940. I'm just going to say something and I've totally forgotten what it was. No, can't remember. Right, next bit. Calculate the overhead absorbed for the production department. Oh, I just remembered what it was. What I was going to say was, if you think, oh my goodness, I don't really know how to do this, I'm getting in total muddle, and then you think, oh, I needed that number to carry on. Whatever you do, don't give up. Just do the best you can, even if the number's not quite right. As long as you then do the right thing with the wrong number, you would still pick up marks in this later part of the question, right? So you do get own figure marks. So do bear that in mind. Right, back to this. So calculate the overhead absorbed for the production department. So we are saying that it's going to be 34,190 per production run. We've actually done 56 production runs. So we have to multiply the 34,190 by the 56 to work out how much has been absorbed, which is a big old number, 1914640. The overhead absorbed for assembly, do the same principle. So we take the 184,1860. No, we don't. Sorry. We take the 96,940 that we just calculated as the overhead absorption rate, and we multiply that by the actual number of inspections, which is 18. So that gives us 1744920. Right, last bit. Calculate the amount of under or over absorbed overhead for the production department for the quarter. Enter your answer to the nearest whole pound. Right, so it tells us that we've actually incurred this number, 1915368. Looking at the production department, so we worked out that we absorbed 1914640. So you just have to find the difference between those two numbers. So we've obviously absorbed less than the actual, so we're going to have an under absorbed as the drop down here. And then if we find the difference, we get 728. Okay, on to task 3, which is another 24 marker. This one is about short-term decision making, so using your PV ratios, your break-even analysis. Identify whether the following statements about contribution are true or false. So contribution equals fixed costs less variable costs. No. Contribution is your selling price less your variable costs. So that one is false. Contribution can be calculated per unit and as a total figure. Well, yes, that's certainly true. You can do it either in units or in total. Match the following definitions with the type of cost behaviour. So total cost increases in an equal proportion as the volume of output increases. Right, so that's saying as I make more, do my costs sort of keep going up by the same amount? So yes, if it is a variable cost, because if you were making, I don't know, chairs and you need £10 worth of material per chair, every time you make another chair, then you're incurring an extra £10 of cost. Total cost has an element of both fixed and variable. So that's clearly describing a semi-variable cost. Mossley Heights is a small hotel with 90 rooms. The costs of running the hotel are as follows. Food, consumables and laundry, which are variable costs. Labour, which is semi-variable. And we've got some data here about, and I'm immediately thinking I must have to use the high-low here. Building and finance costs, which are fixed. The forecast profit for 70 rooms is shown in the table, and each room is charged at the same rate. We have to complete the table to show the forecast profit for 60 rooms, calculating the variable and fixed elements of semi-variable costs for both 70 and 60 rooms, and calculating the forecast profit per room, entering answers to the nearest whole pound. Right, so let's start with the high-low. I don't think I can draw on this, so I'll just have to explain it. So we've been given data for the high-low. So we've been told 90 rooms is 54,240, whereas 70 rooms was 44,520. So that means that for an extra 20 rooms, it has cost an extra £9,720. So if I then divide that through, it means that for one extra room, so I had a difference of 9,720 for 20 rooms. So do 9,720 divide by 20. which means that for one extra room, it costs an extra £486. So that must be my variable cost. So then if I feed that variable cost per room into one of these data sets, so let's say I do the high. So if I do 90 times that 486 that I just worked out, that gives me 43,740. That must be my total variable cost. But I know that the total cost is 54,240. So if I subtract my total variable cost from my total cost, that is going to leave me with my fixed cost. So 54,240 minus the 43,740 that I just calculated leaves me with 10,500 as my fixed cost, the fixed part of my semi-variable cost. So I can put that in for both. Now, remember that we worked out that the variable cost per room was £486. So now I can do 70 multiplied by 486. So that comes to 34,020. And then I can do for this one 60 rooms multiplied by the 486, which comes to 29,160. Right, let's just go back to the 70 now to get the forecast profit per room. So I've got a forecast profit there of 37,980. So if I just divide that by the 70 rooms, I get 543. Right, so let's do the 60 rooms now. So it's key that it told us that it's the same revenue per room. So we can do 308,000 divide by the 70 rooms to work out how much per room. And then keep that number in your calculator and multiply it by the 60 rooms. So that gives us £264,000. We can do the same for variable costs because variable costs obviously vary per room. So if we do 45,500 divide by 70 and then multiply by 60, that gives me £39,000. Fixed costs are obviously fixed, so they are going to stay exactly the same. So now we can work out our forecast profit for 60 rooms. So it's going to be my revenue minus all my costs. So 264,000, subtract 39,000, subtract 29,160, subtract 10,500, subtract 180,000 gives me 5,340. So now my profit per room, 5,340 divided by 60, is just a measly £89. So you can see it makes a huge difference for this business to just get those extra rooms filled, how much more profit they are making per room. It's because there's quite a heavy weighting to the fixed costs here, obviously. Right, good. The owners of Mossley Heights are considering renting some rooms to local businesses on a commercial basis. The following additional information is available. We've got the selling price per room per day, the variable cost per room per day, and the fixed costs per room per month. If you want to, you could view this in the reference section, but I'm just going to leave it like this. Calculate how many times each room must be let per month to break even. Right, so I'm going to use my formula, which is fixed costs divide by contribution per unit. So contribution per unit is selling price take away variable costs, so 125. My fixed costs are 2,000. So 2,000 divided by 125 gives me 16 times per month. Rooms could be rented for 50% more per day if they were converted at an additional fixed cost of £1,000 per month per room. So the revised contribution, so my fixed costs were 2,000. This is an additional 1,000. So now I've got a fixed cost of 3,000. And if they're going to be rented for 50% more, so half of 150 is 75. So that takes us up to £225. I think. Hang on a minute. Don't trust my mental maths. 150 times 1.5. Yeah. So £225 minus the same 25. So my contribution per unit is now 200. So to calculate my revised contribution, oh, I've done that already. So that was 200, wasn't it? 225 take away the 25 variable costs. Oh, look, it's fed me. I was trying to do it all in my head. Revised fixed cost per room, we said was 3,000. And then we've got to calculate the new break even. So easy now, we've done this. So it's 3,000 divided by 200, which is now 15 times per month. All right, so a little bit less to break even. Number of times. We had 16, now it's 15. Use profit volume analysis to calculate the profit volume ratio for the original and revised plans. Right, so the profit volume ratio is the contribution divided by the sales. So the contribution for the original plan was 125. The selling price for the original plan was 50. So if I do 125 divide by 50 times 100, and it wants it to the nearest whole percentage, so the answer is 83%. And then for the revised plan, the new contribution we know was 200. The new selling price was 225. So 200 divided by 225 times 100 gives you 89%. So which option is the most financially beneficial? Well, the higher the percentage that contribution represents, the better. So you're going to be better off going with the revised plan. And you probably figured that out when you saw that you didn't have to do quite so many room lets in order to break even. So the revised plan is beneficial. Right, task 4, which is 16 marks, about the principles of budgeting and cash management. So the standard material price of a product can be established by multiplying, so it's material, so it must be price per meter, by the quantity of material that you need per unit. Identify whether the following statements about budgeting are true or false. An operating statement compares budgeted revenues and costs with standard revenues and costs. Right, so just to kind of decode this, an operating statement is, you know, the thing you do when you might flex your budget and then you compare that to your actual to work out your variances. So does it compare budgeted figures with standard figures? Well, no, it doesn't. Standard costs is like how much does it cost to make one item. So the operating statement actually compares budgeted figures with actual figures. So therefore, that one is false. A budget which is continually updated by adding a further accounting period is a rolling budget. So that is just the definition of a rolling budget. So that is true. Identify whether the following statements about liquidity are true or false. Securing a bank loan will improve liquidity. So liquidity means that the business has got money available to be able to pay its debts as they fall due. So if it gets a bank loan, it's going to have more money available. So yes, that would be true. The reduction of an arranged overdraft with a bank will improve liquidity. Well, no, because if you haven't got so much overdraft, you haven't got so much access to funds. If you haven't got so much access to funds, you can't pay your debts as they fall due. So that one is false. Liquidity management means the management of, inflows and outflows. Get the money in quick, pay it out slow. That's the plan. And the arrangement of additional finance where there is a cash. So you would need additional finance if you didn't have enough. So if you had a shortfall. Okay. Identify by selecting add or deduct how a business reconciles profit with cash. So we know that profit's different from cash. So a loan repayment, we're going from profit to cash. So a loan repayment wouldn't be income to affect your profit, but you would get the money. So you would add. Sorry, going bonkers. I was thinking we were getting a loan. We're deducting it, of course, because a loan repayment means you're paying out cash. Sorry, I was thinking about something else. Depreciation. So that is a non-cash expense. So that would have been subtracted to get to our profit, but we never physically pay out any money. So we need to add that back. Buying non-current assets means that we'll be spending out money, so deduct. And capital introduced from the owners means we'll be getting money in, so we would add. And you can see it's gone profit and it's gone like deduct, add equals the cash. So it helps you to see where we're doing the reconciliation. Meter-U Limited is a provider of software support. The owners of the business are concerned about the cash management of the business and are reviewing the working capital requirements of the business based on information from the last 3 months. They have hired a consultant to assist them. They have been informed by the consultant that their inventory holding period is 102 days and their working capital cycle is 134 days for the 3 months, not the year, ended 31st of December X2. Extracts from the financial statement contain the following information. So calculate the trade receivable collection period for the 3 months to the nearest whole day. Assume each month has 30 days. So 3 months will be obviously then 90 days if we assume this. We know that's not technically true, but never mind. So trade receivables collection period, we do. The trade receivables divide by the revenue. So just knowing that formula and then timesing it by 90 days because it's for the 3 months and not a whole year. So that gives us 67 days. Calculate the trade payable payment period. Now you might think, oh, hang on, they haven't given me the trade payables and the cost of sales that I need to put into my formula. But they have told you that the inventory holding is 102. So if we add the 102 to the 67 that we just calculated, and we know that we've got to subtract payable days to get to the 134, that's the working capital cycle. Right, so if we work backwards, if we do the 134 minus the 102 minus the 67, then we can work out that our payable days must be 35. So pressing answer, I'm hoping these spreadsheets are going to load and you can join me in the next video for task 5 and 6.